Hello everybody, hope that you are good. Bitcoin is moving up and it's not catching us by surprise because this is what we've been talking in the last two videos. We went through Ethereum. Let's go back to Ethereum. Yesterday, we were saying that Ethereum was only 1.5%, well 1.3% away from the range highs. It was so close to the range highs that I was going to test it. Whereas Bitcoin was pretty much the double away from it. It was around 2.5%, 2.60%, okay? And if Ethereum was going to test the range highs, why is Bitcoin not going to do the same, okay? And that was telling us that perhaps Ethereum was a leading indicator of what Bitcoin was going to do next, okay? That was the first idea. Then, of course, we also went through the order book. The liquidity was to the upside. You guys remember those two red bars at 44,000 and 43,500. Those two red bars have been hit because current price is 44,700. Also the liquidation heat maps, guys. You remember 1 month time frame. What happened at 44,200? We're gonna have a look at it in a moment, okay? But all those liquidations, all that liquidity has been absorbed by the market maker now. Okay? Now the retail trader, this is what we were talking in yesterday's video now. The retail trader is looking at this pennant here. Okay? For them, it's a continuation pattern. And the market maker likes to play with this. Okay, is he gonna give the full pattern? I mean, sometimes he has to, but other times he won't. Okay, because if he never gives this pattern, then the retail trader is gonna stop looking at this. Okay, so sometimes, yeah, the retail trader has to win. But overall, the market maker wins. So the question is, are we going to see this pattern playing out and fill the wick straight away? It's possible, okay? Or are we going to see this pattern, okay? The market maker pattern. And that would mean that this is basically a fake out, and then we're gonna drop to the range lows, retrace this liquidity pool, and because this wick hasn't been filled and this liquidity pool hasn't been fully retraced, this would be a good place to long for us if we get this pattern, okay? Because yes, I mean, I believe that it's likely that we break to the downside of this pattern, of this range, sorry. But in the meantime, if we have a wick to the upside, that wick needs to get filled first, okay? So you guys probably remember a chart that I posted a few weeks ago, and I was talking about a boring scenario that is basically something like this, okay? Some consolidation like this until we break down from the range and test this support here at 36k, okay? And so far that's what is playing out. Boring scenario, guys. Boring scenario. Why is still in the range? And now we're at the range highs. Make or break. And this is a very important level because this is going to decide whether if we want to see this failed pennant pattern and we're going to go to the range lows, okay? Or if you're going to actually see some continuation to the upside and fill the wick directly, okay? So for that, there are a few things that I want to pay attention to. The first thing is the daily time frame. If we close today's candlestick at midnight UTC time below the range highs, that'll be telling me that is the fake out, okay? That'll be telling me that is the fake out. And then we're gonna go down to the range lows. So that's the first thing, okay? A daily close below the range highs, for me, pretty much confirms this is a fake out, and we're gonna go to the range lows. In the other hand, if you go to the 4 hours time frame, we can already start to see candles closing above the range highs. Okay, and this is very good. So let's see if this continues, because of course right now we're in the London session. Asia has pretty much held here, okay? This pump was during the New York session, then Asia held. London is pretty much not doing much, to be honest. This is London, okay? Let me mark you what London's doing so far. This here is London, so really not much. They rise price, now a little retrace, so I mean it still has an hour and a half left, but pretty much nothing is happening. And when I upload this video, it's probably going to be the start of the New York session, and that's going to be the most important session of the day. Because if in the 4 hours time frame we start to see more candlesticks closing above the range highs, that'll be telling you they're testing at the support to send it higher, okay? And potentially we're going to retrace this liquidity pool over here, and of course the wick. Okay, so very important level in the chart. I said yesterday in Twitter, in the YouTube videos, blah blah blah. Range highs are very important right now. Okay, and it's going to decide what's going to happen next. We're going to go now to the order book. We're also going to go to high block capital, so meet you there. High block capital, 7 days time frame. Let's check this out. Look at that, guys. All the liquidity is taken. Okay, remember that we've been talking for days about this liquidity between 43,650 and 44,700. Well, it's all taken now. Okay, and now once it's taken, the market maker is consolidating price. You can see that there hasn't been a consolidation this long in these two levels. Okay, because the aim was still higher to get the liquidity above this zone. Okay, around 44,700. But now that it's taking the liquidity, the market maker is consolidating price because they're trying to decide what's going to be the next most efficient move. Is it going to be to the upside or to the downside? Well, let's see what the retail trader does first. That's probably what they are thinking, okay? Because yes, if you run again this map, what is this? I don't know what I've clicked, I'm sorry. Let me see this again. Okay. If you check this out now, you can see that the liquidity to the upside is still quite far away. It's at 47,000 next, okay? Now, if they consolidate price, maybe retail trader starts to jump into shorts, the liquidity here increases, and then they might have another reason to increase prices, okay? Not just to fill that wick or that retrace the liquidity pool, but also because there are going to be new liquidations appearing there, okay? But so far, you know, they are chilling. There is not much liquidity to the upside regarding liquidations. Of course, yes, regarding imbalances, but regarding liquidations, nothing yet. It's all taken for now. To the downside, yes, we still have 41,350. Okay, that's pretty much a bit above the range lows, and that's an area of interest. That's around also where the liquidity pool is. If you check now the 1 month time frame, this is even more clear. Look at this. Look at that yellow bar, 44,200. We talked about this also in Monday's video. It's taken, okay? They took that liquidity, and now they are consolidating to see what they're gonna do next. Now, if you go to the liquidation levels, this is a chart that I really like, okay? Let me change these settings to max liquidity. Don't take the numbers with a pinch of salt, only as reference because they are not real, okay? They are obviously inflated. I don't know, they are obviously lower than it says. So it says $10 billion worth of long liquidations at the moment. This is basically telling you that the retail trader is mainly positioned into longs. And this is also what we anticipated yesterday. Why? Because there is a classic pennant pattern. That's a continuation pattern for the retail trader. The retail trader trades based on conventional trading patterns. So it's quite normal, you know, that the retail trader is mainly positioned into longs. The problem that they have is that they're probably going to hold into those longs, and maybe that's when the market maker decides to reverse and hit their entry or their stop loss. Because pay attention to these spikes at the right of the chart. You see these spikes, they are below the current price. Those are liquidation points of long positions of high leverage traders. All right? So, there is a reason that the market maker might pull price down, okay? Hit these liquidations, reset the chart, and then let's see what happens, okay? So be very careful with this, okay? To me, the confirmation, again, would be in the daily time frame. If we close today's candlestick below the range highs, that'll be telling me, guys, that's a fake out. They are playing with that pennant. The market maker is playing with that pennant, okay? Not the retail trader, the market maker is. And then they will retrace price back down, hit all these liquidations, all these spikes, reset the delta liquidations, and everything is the same as yesterday. But they have more money, all right? So be careful with that. Pay attention to the daily candlestick. If not, if that doesn't happen and any actually closes above the range highs, then of course we're gonna see most likely continuation to the upside. We're probably going to go towards that liquidity pool, and of course to that wick at 48k that needs to get filled sooner or later, right? So I'm just telling you what you need to pay attention to. This is what I do, okay? I have my levels in the chart that I know how I want the candlesticks to behave, if they behave in a certain way, it's telling me that this is going to happen. And if they behave in this different certain way, then this different thing is going to happen. Okay, that's how I kind of trade. Well, that's how I analyze for me to then trade. Right? Now let's go to the order book. Let's see if we can get a hint of where the liquidity is. Is it still to the upside or to the downside? This is the order book, guys. Okay, in very short time frame. That's why you cannot see the red bar at 44k and 43,500 that we had yesterday now absorbed, because this is in very short time frame. Okay, so it's basically showing us where the liquidity is currently at, and you guys can see it's still saying to the upside. 45k, 46k. What are those orders at 45k and at 46k? Because if you notice, those are round numbers. So are those limit sell orders from the retail trader? Because yes, the retail trader is not going to have a short at 44,875.60. So I have it at 45k at a round number. Okay, this is simply how our mind works. Okay, we like round numbers. So my logic tells me that those are possibly sell orders. I mean, it's probably gonna be a few take profits there of, you know, the less greedy retails. But I have the feeling that with these last candles that we've seen, these green candles, then retail trader might get a bit too excited and rise their take profit level a lot higher. Okay, so possibly, I don't think those are liquidations, because we haven't seen those liquidations in any chart. Okay, in high block, so those cannot be liquidations. Can it be stop losses at 45k? Could be stop losses of traders that are trying to short the range highs. But bad idea, because we're above range highs. So I don't think there are stop losses, to be honest, because, you know, we haven't tested our resistance. Like, we literally broke the resistance and we are above it. So in my opinion, they have to be sell orders at 45k. Are those sell orders gonna be big enough to dump price? 203 Bitcoin, it says there. You can see that, okay? At the right of 45k, it tells you 203.3. 203.3 Bitcoin worth of short orders. Not enough, to me at least, okay? So yeah, maybe market maker pushes price to 45k at least to absorb all those sell orders. Then that could fuel the move to continue rising prices towards that liquidity pool, towards that wick at 48k, while they are trapping already these traders. Okay, so now that we've got all this information from the order book, from High Block Capital, we're gonna go back to the chart. We're gonna make a plan. Okay, we're back in the chart and we're gonna try to make sense of all that information that we've seen from the order book, from High Block, and from the chart itself. Okay, so the first thing that I want to say is that if we go to the daily time frame and we see today's candlestick, today's daily candlestick, this green candle at the moment, closing below the range highs, that'll be telling me that this is in play. Okay, and this would be, go back to the 4 hours time frame, guys, that would be a fake out, this fake out, and then a pullback back into the range lows, where to be honest, if that happens, I'll be preparing here, I'll be building here a long position, okay, to attack this week over here. Because, yeah, I mean, this is a huge imbalance that needs to get filled sooner or later. So that'll be my target. And that's possibly around a 20% move for Bitcoin, okay? If we target the 50% of the week, which is where I would take most of my profit. So if that happens, then I mean, it wouldn't be a bad thing to see this drop, okay? Of course, yeah, it would be quite nasty. This is how much of a drop? It's around a 10% drop. This could happen over a week or 2 weeks. But if that happens, nothing bad, okay? Because you still have this week to the upside that needs to get filled. So this could be a good area, a good opportunity to load up again towards that zone, okay? At the end, in my opinion, this is not an uptrend. We've been in a consolidation zone, in a sideways zone, after a push up, after an uptrend for the last 2 months. Look at this. This range started the 5th of December. This is not an uptrend, guys. This is a range. It's consolidation. okay? And this range can last for another month. Why not? And there is a lot of good opportunities inside this range. So embrace the range, guys. Embrace the range. Now, let me remove this because we've already talked about that scenario. If you guys remember, we've seen in the order book a level 45,000 with a lot of sell orders. Well, that's what I think. Okay, that's my interpretation of the order book, because it doesn't make sense that they are stop losses, because the retail trader that has open shorts at the range highs, I mean, it wouldn't make any sense literally, because we went straight away back above it. Okay, so it's been tested as support. It wouldn't make any sense to open shorts. Okay, if for example price was hitting, look, let me move this line. Okay, imagine this was the range highs, then it makes sense that those are the stop losses. Okay, because we are testing our resistance, the retail trader knows that, and they're going to open shorts, and then they're going to have the stop losses here. But right now it's not the case. This is the case. Okay, it cannot be a stop losses in my opinion. Those are not liquidations neither, because we haven't seen that information in high block capital. So to me, the only reason is that they are sell orders, which also makes sense because it's a psychological level, 45,000. And that is how the retail traders mind to work. Okay, I long at 40k and then I sell at 45k, for example. Okay, so that's what I think. Now, those sell orders could be fuel for the price to continue rising higher. Okay, because as you can see right now in the 4 hour time frame, which is a quite strong time frame, we're only seeing candlesticks closing above the range size and testing our support, which is a very good thing. Let's see what New York has prepared for us today, but if that's the case, okay, and even if we come low again and we continue testing the range size as support, that's a very good sign that we are going to see continuation. Now, New York might straight away hit those sell orders, and that could basically add fuel to the chart to continue pushing price higher, retrace this liquidity pool, and even go straight away for this week at 48k. Okay, and that is pretty much from here, from 45k, that is pretty much a 6.5% move. Okay, so that's basically what I'm paying attention to. So far I don't see any very signs. Let's wait for the daily candlestick to close. Maybe that changes. Okay, because if we close below the range highs in the daily time frame, then that's a very sign. But so far for us time frame, it's not showing anything negative. Okay, we are above support right now. Continue testing our support, or even send price from here from 45k, absorb all that liquidity, continue pushing price higher. All right, guys, so I hope the video is very clear. This is what I'm attempting with these videos. I want that you guys understand what is in my mind. Sometimes it's difficult to express, but I'm trying. Okay, so thank you so much for watching, guys, and I'll see you soon.